Welcome, everyone. Happy hump day. It is 7:04 p.m. Eastern, April 5th, guys. Welcome to my channel. Welcome to Digital Goats Academy, and welcome to Digital Wednesdays. Guys, I'm your host, the Digital Goat, guys. If you are tuning into my channel live, please make sure on your way out or as you're coming in, guys, you hit that subscribe button, as well as like, comment, hit that notification bell so you can, guys, stay up to date on all my content. But welcome, guys. Welcome, man. The market kind of wild out this morning. I wouldn't say too much. But yeah, it was an adventurous day today, guys, right? So not a lot of downside momentum to a lot of indices this morning, guys. So I'm going to touch on that in a little bit, but let's always start from where we start from, which is normally the DXY, the dollar. I'm in America, so I care about my country's currency because that helps me kind of gauge on what the economy is doing. So just getting into it, guys. This is the DXY as always. So let me back out on a higher time frame. Now, I mentioned this yesterday. So if you were on yesterday, excuse all the graphics that's going on, but this is how I annotate my charts, guys, because I'm expecting a big move from the dollar, or I'm expecting for the dollar to give me a little bit bias on what it's trying to do already, guys. So yesterday, what's today? Wednesday? Yeah, today's Wednesday. So yesterday we talked about the dollar. I mentioned that I was expecting the dollar to grab this gap right here, guys, right? There was a gap that was produced Tuesday, dropped the dollar down, and we were, we were over here, right? We were over here where I mentioned, hey, this was the zone that I expect the dollar to actually return to if it does decide to come all the way back down. Now, when we were looking at it, the move that it made to the downside was this first move right here. That was around, no, it wasn't. 3 a.m. April 23rd. Hold up. Oh, no, we were all the way down here. So we were all the way down here where I expected the DXY to pop up. So 3 a.m. in the morning, it popped down. You see, at 7 a.m. this morning, popped down. 10 a.m. popped down again. That was the final move back into the zone. But if you see, guys, based off these wicks, price was rejected. Well, didn't retest this zone until pretty much the 10 a.m. candle or 9:45, 9:30 candle drove the market into the zone, all the way into the zone. And that was pretty much our confirmation for the dollar being bullish. Now, if you guys remember, I gave you guys a scenario because we were looking at Euro USD. We actually caught a couple of dollars off of Euro USD yesterday. If you remember, where I kind of showed you guys I showed you Euro USD, but it pretty much looked like the opposite of the dollar. and I was giving you possibilities of where Euro USD can pop up to. And I said, man, it could pop up here or pop up here. There were a couple zones where it popped up. Let's actually look at that. So overall, right now, we're in consolidation. And what I'm looking at for the dollar, I'm looking at a continuation of this market. So right now we are in consolidation. Market's not really showing us what it wants to do. Now it is 708 and the DXY is not open. So currently the DXY is not open. So we'll actually have to wait for a little bit more data in order to kind of make a decision. But clearly this is a bearish move. The market broke out right now. Like I said, it's consolidating within this zone. Let me change to what I did. Consolidating within this zone right now. It's ranging between 109.9 to, 101.9 to 101.84. So, well, 98 and then 84. So that's where it's ranging at. It's at a previous high right now. So I wouldn't be surprised if it respects like support within this consolidation zone, that the market doesn't take off from here. But again, we have to wait until the dollar opens. Now, what I expect is that if the dollar is bullish, it's probably going to gap up and then come down to collect that move. I don't know, maybe like 12 a.m., probably going into another market session. It would just make sense. 12 a.m. would go into another market session, pushing us out of Sydney, and Tokyo would push us out at 2 a.m. So probably anywhere in those zones, you'll probably look at a price to pretty much fill that gap if it does gap up. But again, that's just speculation, guys. I don't want y'all to take that for like, God's word, you know what I'm saying? But it is consolidating right now. So the only thing we can wait for is instructions, basically, for the breakout to either the upside or the downside, make a move from there. But from this support structure, we are bullish. We've been down here 3 times, and unless the dollar decides to return back down here, we have to assume that we are bullish. What was I going to do with this rectangle? Was I going to mention? I don't even know what I was going to do with this rectangle, but whatever. I think I was just going to make it like, oh, no, I was going to label it consolidation. Yeah. All right. Now I'm going to show you guys Euro USD real quick, just to show you where we caught the moves from, on how it pretty much looked exactly like the opposite of what we were looking at for the dollar, right? So let me go ahead, and my anticipation is that the dollar, what I'm looking for, I'm actually looking for the dollar to make its way back up to these once it starts showing. Where are you at? Okay, back up to these levels right here. I even have a gap that the dollar, it filled with the wick, but I think it's going to come and collect that on the opposite side. If you really look right here, this gave us our head and shoulder pattern. It looks funny. It looks funny. I don't like to rely on a head and shoulder pattern. But if you look right here, something like that. So if you look, that was a head and shoulder pattern that brought the market down. What I think is that was the move and the market has exhausted itself. So normally when you have a head and shoulder pattern that has exhausted itself, if this, pattern is valid, I mean, it has to be valid because the move was already made. But so normally what happens after the market has exhausted that pattern, when it comes back up and you see that it comes back up, because this was the move, this selling, let me show you guys. This was the move, and really you just had to be in preparation for like the right shoulder, which, it probably would have been somewhere up here, that you would have made your mark. Yeah, that seems, yeah, it seems that looks a little better. So pretty much what we're taught is what? We're taught that you buy or sell at the end of the right shoulder or at the tip of the right shoulder, not the tip, but the end of the right shoulder. So in hindsight, this would have been your move in order to take the market down. Now, where we've hit a previous high on a higher time frame. So if the market continues pushing up, we're pretty much going to go past this head and shoulder. Now, what it could do is that when it comes up here, now that we have this head and shoulder, it could respect this resistance that's up here. So I can see that as a possibility where the market would pretty much create a double top and then bring the market down from there if it's going to respect, well, it's going to respect the resistance. But if we are continuing to sell from here, so I'm expecting, I mean, right now it's NFP week, guys. So understand any narrative we create it's really not going to happen. I mean, it's not going to happen, but you can't, hold true to that because it's NFP week. There's a lot of data that hasn't been flooded into the market, and it can make the market act completely like chaotic, but also be pretty docile. Last time we had NFP week, the market didn't really do much. It actually was favorable to us. So, I would definitely be on the look at taking advantage of early in the morning as we're going into NFP, and maybe try to find positions where you can just like hold a position, because NFP does expose swing positions, right? So if we make it all the way up here, but pretty much after we get to this zone right here, I'm pretty confident that we're like buying. We're buying pretty much all the way back to the previous resistance zone, major resistance zone, and then possibly falling from there. Now, I don't want to talk you to death about, the dollar. I just wanted to bring that to light because this is going to be like a potential big move that we're going to be seeing happening in the markets, right? So Euro USD last night, I talked about it last night. If you guys look, this is actually the zone that we had marked up in my own community. So we had this zone marked up where the Euro USD actually popped up, came back up to the zone after we sold. So we sold from up here. Broke all the way up, gave you an opportunity to sell like 3 times, then popped all the way up with that 9. Actually, that was 930. So how the dollar came all the way back down into that zone. Same thing over here, right? Same thing over here. And that was pretty much a bank entry right there. So this was pretty much influenced by a wick, right? It was influenced by a wick of a bank entry around 9 o'clock. How do I know it's a bank entry? It's normally around the times that the banks are actually moving their money and stuff. And that's normally opening bell or anywhere, 9:30 to 10:30. So normally you're going to see this wick up here around 9:30, 9:45, something like that, if the bank did enter in this market. So right now, currently, what time was? So because I base it off of, I think I talked about this yesterday, because I base it off of market sessions, I believe that America is in control of Euro USD in a sense, guys. Like, and I'm talking about the technicals for us looking at it to sell. So that's me saying that I think America is more bullish than the euro against this currency, and that's what started bringing the market down. And I do expect the market to continue falling. This just showed us a pattern that the market is doing. So again, same thing on this time, same thing on Euro USD. You have what? You have consolidation going up. It's doing it upward. So most people don't even pay attention and say that's a trend, but you can consolidate up and downward. So right here, same thing, consolidation. Now you probably would, instead of just say consolidation, probably call it like a channel. I think that's what most people say. It's a channel. So the easiest way to look at this channel when, how you guys are trying to anticipate it is that you either want to break to the upside or to the downside, and that'll kind of give you your move, at least for however long the market is going to go up or down, right? So if you're looking for a buy, market will have to break out, drive somewhere back into that zone, and then pop up, and that could be a retest back into the zone or to create a higher high. Or what the market can do is pop down. And again, you want the same thing to happen back into that zone and then pop out. Now, I normally already made up my mind on which direction I think the market is heading, which in my opinion, we're in a selling market. But again, we can have opportunities where the market could want to retest these certain positions and then bring the market down from there. But we are in the seller's market right now, guys, until proven otherwise. So until I see the market maybe back up here, I'm going to stick to that. We're in a selling market, guys. But like I said, just to not necessarily be safe, but just to be, smart about us trading, we can just wait for the breakout on either or. But again, this is a previous low in the market. The momentum's strong. The bank entered this market. So more than likely, the momentum will continue. Let's actually look at the momentum. So yeah, more than likely the momentum will continue. Flat bottom, flat bottom, flat bottom, and this brought us into 5 o'clock. So makes sense, but more likely the momentum will continue after the market is done, either consolidating or breakouts or retest a previous level of support, and then bring the market down, guys. So I'm looking for a sell once we have, our initial move for Euro USD. So I'm looking at it around this zone, but again, if once we hit towards 8 o'clock, if the market like pops up here, I have to respect that the market is probably trying to retest these levels and then push down from there. So let's look at something else. I think we're looking at gold. Gold is my last one, and oil. Oil is my next one, right? So there is something I want to bring to people's attention about the oil and dollar, and I'm gonna show you guys there in a second. Same thing for gold. I believe that gold has pretty much exhausted itself, and now it's at the point. Now this was where, which one was it? Was this? Yeah, this is where I believe like America entered on gold and then drove the market up, wiping out the losses that it had. This was another big entry that I saw. So wiping out the losses that it had against gold. And what I think now is that since it wiped out its losses, it's going to gain more equity by everybody who's believing that gold is going to continue to go up. But we are still consolidating. I do see the possibility of gold still rising. I was actually looking for a new high to be created. But right now, I think pretty much the market has exhausted itself and it wants to collect at least some liquidity back. Like I said, before, I think yesterday, gold has an area that it needs to pretty much come back and retest, that there was a gap left over in the market. I don't know when it's going to do that, but I think, based off of what we're seeing right now, this could be the possible move that gold is actually going to try to come down and collect this. And then from there, we'll make a decision. I'm still looking at gold to be overall bullish, but it does have a lot of correcting or recovery to do in order before it continue to go up. So I would say wait for the consolidation point. The same thing. We're in that Sydney to Tokyo session, guys, where nothing really happens in this market. It's stagnant. You know what I'm saying? So I would say same thing here. Wait for price to show you what it's going to show you with the breakout. Enter in the market, whatever direction it gives you. But again, same thing with oil. I mean, have I been saying oil? I hope I've been saying gold. But anyway, same thing with gold. This was a bank entry right here. I believe the banks are still in control of this market as far as American banks or American investors are still control of this market as far as on the selling side, and it's going to push it down before it decides to actually come back up. So I can see it, at least correcting back to these zones and then deciding to push up. But again, guys, it's NFP week, so obviously play it by zone and whatever your pip count or risk management criteria is, guys. Just make do with that. So don't just try to hold the trades until we probably, what's today? No, it's not Thursday yet. So probably Thursday to give you a better opportunity to start holding some of these currency pairs, guys. But yeah, that's just pretty much my narrative for today going on until tomorrow. I'm looking at selling opportunities within indices. I'm looking at bullish opportunities, right? So I'm looking at indices to get bullish, not necessarily from here, but once they're done doing the recovery phases and head back up to the upside. We have a lot of buying pressure within indices, guys. So we'll just have to see like what the market does, what the market shows us, and make a decision from there. But I'm still looking at indices to be bullish once they're done, correcting themselves on within the market. Now, the one thing that I want to shed the light is that oil is extremely bullish right now, guys. Extremely bullish. I don't even think oil is going to want to capture this gap that it made right now. I don't know when it's going to decide to do that, but with NFP going on, this would be the perfect week for it to do it, or if not, next week, guys. So here's just what I want to show you real quick before I end this session. I don't even want to go into oil too deep, right? I want you guys to see this. Right? This is a 12-month chart. This is US oil. I want you guys to see this. Now, do me a favor and hold on, right? Do me a favor and hold on. So this is This is oil on a 12-month time frame. Now, this is what I'm going to do. I'm going to go to the dollar and I'm going to look at it, I think on a 12-month. Let's see, 12-month, or maybe I have to go higher, but let's see what it looks like on a 12-month. You just can ignore the distractions of all the info that I have on there, guys. But man, what time frame was that? Was it still the 12-month? Yeah. I mean, if you look at these guys, wow, with the possibility of oil going up, look at the dollar. Don't these pairs look pretty similar as far as like bias is concerned? Look pretty similar. Let me see if I can go down on oil to kind of give a better. Oh no, that's the dollar. Let me see. Close enough. Close enough as far as what I was looking for. But look at this. Don't these look oddly alike, man? It would be crazy if oil ignored that gap, and this in the rest of this entire year, this market just decided to run away from that gap for whatever reason. There has been a lot of moves where the markets have been creating gaps, and I know a lot of you guys have been exposed to the okay, once it collects a gap, I mean, once it gaps, it should come back to that. But a lot of these on the higher time frame gaps or major gaps that these markets have been making, they have been running away from it. I can even give you an example. But basically what I'm getting at is that oil and the dollar are looking pretty similar, guys. You know what I'm saying? That's just something that I'm shedding the light. I'm not trying to say that there's a correlation necessarily, but wow, they look so much alike, it's almost crazy that they are different currencies. You see what I'm saying? Or different pairs to be traded, right? Now I'm gonna show you guys another currency that had gap, which is the Swiss franc. So this is what I found for the Swiss franc index. And if you look at it, guys, on the smaller time frame, it had also gapped, and look what it did after it gapped. Let me get rid of this. Oh, I think that was the daily that I was looking on. Yep. So if you see there was a gap made on the daily time frame, 4-hour time frame, right? The market never came and collect that, but it got extremely bullish from here. Now this was news based off of that USB move to pretty much purchase Credit Suisse. And I expected positive reaction off of that. I just didn't stay in the market long enough, and that drove USD Swiss franc down. And I was expecting that, but it was throwing a lot of like curveballs at me. So I kind of stopped messing with that pair. But guys, yo, just spotting that, you see, this is on a higher time frame. This market has yet to collect this gap in the market, and it will eventually. We just don't know when. So I don't know if it's going to continue bullish and then decide to come down, or if it's going to decide to recover from here. But this was the move where the market made the gap. It's going to have to come and fill that gap, guys, eventually. At least a portion of it, if not all of it. Doesn't have to come down to the whole thing, but it should come down a portion. So even halfway of this gap. And basically that's what I'm in preparation for, which from there, we'll be able to assess, like, is this market still bullish, or is it gonna, pretty much move all the way down here and then decide to get bullish? My thoughts are is that move added some positivity to the USB, which again is another Switzerland bank. And what's going to have to happen is that they're going to have some type of recovery before getting all positive, but this is going to stabilize that currency, guys. So what I'm looking for it to do is once it creates its true resistance, to drop and probably go past down here, creating like a new low to take advantage. And then from there, that market will probably start getting bearish bullish, in my opinion. Once we see like these levels all the way down here, that could take us like years, guys, like a couple years for that to happen. But if we're in preparation, we can definitely take advantage of it. So I'm looking for it to make its recovery eventually. We'll just be in preparation for it, guys. But like the only thing I wanted to show you is that a lot of these currency pairs or a lot of these indexes have been making gaps and running away from it and then coming back to collect it at a later date, almost like cryptocurrency. You know what I'm saying? I mean, I haven't seen too many gaps in cryptocurrency, but like how crypto will retest something like extremely late, like extremely late, just how it came back to 20K before it bounced up. But guys, that's just what I think. So I gave you my thought process on Euro USD. I gave you my thoughts on US oil, gold as well. And just make sound decisions. The dollar also. Are we open yet? Let me see. Oh, the last thing I wanted to show you guys was the EXY, right? So the EXY, that's the European index. So this is what I was looking at overall with the European index, right? So I have some annotations right here. Basically, in this zone right here, where you guys see kind of like these two upward lines, I mentioned that the one of the European bank commissioners, he stated, I don't know how to pronounce this guy's name, but he stated that they were at peak inflation for the euro, right? So after he mentioned that, the euro drove down a little bit, then it drove up, and then it made its move, right? It made its move down, right? So that signified what the euro was trying to do, because this was a major move to the downside. Now the euro popped up all the way back to the levels of the previous resistance. Now, could it still continue to go up to create a higher level of resistance than pop down? Yeah, I could see that. We'll just have to look at further fundamentals. But this is important because political figures said we had hit peak inflation. The market drove down with that message and then popped up to create a higher high and then actually popped down, right? And we've actually returned back to these levels. This is something that I saw today. We've actually returned back to these levels, creating what? A break and retest or a double top on the 8-hour time frame. You can say 8-hour, definitely a clearer picture on the daily. So you can say daily, but this could be our M pattern, guys, which sends the euro back down. Remember, the euro had an expectation to go down. Did it have an expectation? Had an expectation to go down to 94, no, 95 even. I think this is that move that where the euro is actually went. Once it's done, you know, retesting up here, guys, right? I think this is going to move. That's going to send the euro down, as well as a lot of these currencies down, which will do what? Cause the dollar to start rallying, guys. So I wouldn't be surprised if we see that once, you know, the market has overall created its resistance in the euro and some of these other currency pairs. And then, man, this could be that move that you were looking for to, like, you know, drop in one position and hold it for the rest of the year, guys. I'm telling you, no cap here. So I appreciate everybody that joins my session every Wednesday at 7 p.m., guys. As always, make sure you hit that subscribe button on your way in, on your way out, however you guys got to do it, man. Thank you guys for your support, man. So catch me tomorrow. I'm going to do the market overview because I like to see like what transpired within the market based off of what we were saying. If it went against us, if, you know, we were right on the money, because we're not going to be right on the money all the time, guys. There's so much data being poured into. And the cool thing about it is that we're the newer generation where our predecessors were. So our predecessors were the ones that were collecting the data, collecting the information for them to regurgitate it to us so we know how to trade, guys. The market has changed its conditions from like 1970, 1980, where we have to collect this data and be able to push it back to, you know, the next generation that's going to come and trade, guys. So appreciate you guys. As always, see you guys at the top because we're taking everybody to the top with us in 2023.